Hello and welcome back. Welcome back to another educational piece. So what we're touching on here is weekly rents. Now, like I touched in the last video, if we're looking at stock on market, days on market, vacancy rates, we want a downward trending graph for all three of those categories because that's going to give us a good informed decision that this market is starting to have demand. Now, this is something that we want to look at as well, is your weekly rents increasing as well. Now, as we can see in this market, they're starting to increase. So everything works with each other. Now, if we go back onto the last video, I'll touch on it again, with stock on market, vacancy rates, days on market, if we start to see your vacancy rates are dropping, your days on market are dropping, but your stock on market is actually rising, what does that mean? And would we go into a market like that? And so what I want to touch on is if the stock on market is starting to rise, that means there's more supply coming onto the market. But sometimes we get deterred from that. And this is something where the devil's in the data. What are those stocks on market coming to the market? What are those stocks coming to the market? Are they houses? Are they apartments, units, townhouses? What are they? And that's where the devil lies in the data. Now, this is where you have to get a bit more sophisticated with your research and you'll understand what's happening there. And we start to look at different programs. Now, I'm showing programs here that are, available to the public for free. We use multiple programs. I use, there's ArcStar, which is $1,000 nearly for the whole year, per month. And that's what we use for. That gives us a whole location of the Australian nation. We use DSR, we use, your SQM, which you can pay your subscription from, your CoreLogic, your Price Finders, you name it, we've got a lot of programs that we use. Now, no point showing you there if you're not going to pay those money to look at data. But I wanted to do these videos so people understand and get an understanding of what we look at, so it gives you a bit more clarity. Now, we're looking at weekly rents. So when we have our stock on market, days on market, vacancy rates are dropping down, your rents, as we can see, are starting to climb. So this is Ipswich area of Brisbane. Let's just go to Brisbane. Now, your Brisbane's, you can see your median rents. So this is very broad. So we want to. I'm going to the city postcode. Now, actually, you know what? Let me go back to Ipswich because it gets you. Actually a more stable market, and it's actually a smaller LGA. So it's Brisbane, the city of Brisbane is quite big, so the figures are going to be all over the place. Where Ipswich is a small suburb, 15 and 19 k's out from the CBD. Now, as we can see, like I probably touched on earlier, I bought a property back here in 2019. Now, this was the time when you wanted to kind of get in. Now, that if you look at the median rents have this increased over time. This is for all houses, and this is for 3-bedroom houses. So your median rents are starting to increase, which is showing high demand. As well, we always want to look at 3-bedroom houses, 4-bedroom houses as well. If you're looking to invest 4 bedrooms, I guess the rents are a lot more as well. But we can see there's demand here. We can see the demand. The prices are rising. And if we come down to the chart here at SQM, we can see that what's been happening in the last 10 years, 7 years, 3 years, 12 months, rolling quarter, rolling month, etc. You're seeing increases of the rental market increase. Now, you might see some little drop off reds here with the downward 2%, but that's nothing to worry about because, like I said, these markets, the property market is something that happens slowly. Now, this is just saying that, this last change in the week is a 2.2% drop. Nothing to be too concerned about. If we start seeing consistent red, there's something to, have your eyes open for. And this is where we're looking at, okay, what is dropping? Now, if we're looking at these markets that are starting to drop here, it's saying that, okay, it dropped by 2.2 last week, the previous week. So it's very, very, very early to start judging this data when you want to be making sure that it's not happening on a monthly or quarterly basis where it's starting to drop. So keeping your eye on a weekly gives you a good decision, a good understanding, a good perspective, but you just got to keep an eye on this to make sure, okay, is it still continuing to drop? And this is where you keep track of things. You put these things in spreadsheets and you can start tracking it. Or you take photos of it and you put them on a weekly, you put them in a document and you keep track of it like that if you'd like to as well. So we're checking our median rents. That's something that is super crucial to understand, because as an investor, we're chasing growth, but we're chasing rental returns as well. We don't want one or the other. We want both, and you can have the best of parts of both. So I want to go to your gross yields. Let me just have a drink. Throat's getting a bit sore, but it's part of the game. Talking. Now, your gross yield. So a lot of people look at yields and they start to see if the yields are starting to increase in the market. But what I wanted to touch on, this is not super important to look at, because you might see this and you start saying the yields are kind of dropping, which they are. They're dropping. Now, yields, if they're dropping, it can be a good thing. And what I mean by that is because the capital growth is growing faster than what the rental return is growing. So if your property starting to increase in value, of course your rental yield's going to drop. So we don't want to look too much at yields because it can be misleading. So let's just say rental yields were increasing. Let's say if they were increasing, they were going through the roof. Maybe they rose at 1%. And you might think, oh, Jesus Christ, the return on this market's growing. But that can mean the opposite. It can mean the median house price, the value of this area is dropping. So when it starts to drop, your rent will stay stable and your rents are actually staying where they are, but the median price is dropping and your yields are increasing. So that's why we want to look at median rents. We still want to check out yields. We still want to have a look at yields, because if we see our median rents increasing, if we see vacancy rates dropping, if we see your stock on market, decreasing, your days on market decreasing, and we can see the yield maybe possibly decreasing as well, that can be a good sign that there's starting to be demand in this location. Prices are starting to get pushed up. So this is something that we need to look out for as well. Just keep our eye on this market. Keep our eye on understanding what's happening. So next thing we want to look at is weekly rental listings. So same location here. And I'm going to split this to houses and units. Well, here we go. So let's get rid of the units. Now, we can see rental listings in the same market here in Ipswich from, say, 2000, and you can say up to the peak here of 2017. Listings have gained decreasing, which is a great sign. Great sign, because that means there's going to be a high demand for rental properties. And so the data doesn't lie here. Doesn't lie. And like we checked back on that, the last page, which was the yields were actually starting to decrease. So that means there's a high demand in property. So prices getting pushed up as well. Your median rents are still going up, which is a good thing. And then your rental listings are trending down. So this is how we look at data. Data doesn't lie. So hopefully you got something from this. Gives you a lot of clarity, understanding what's happening in this particular market. And it gives you a good informed decision. And this is something you can use for your own research. If you find a town and you want to do some research, by all means, do this research, understand this market. But before you start going to there, like I've touched on my previous videos on how to identify a hotspot, we want to make sure that there's a lot of works, your infrastructure projects, job nodes, people moving there, migration, etc., etc. We want to make sure that that's happening there first before we start looking at this sort of data. It's all good looking at this data, but if there's no, influence in the market of, significant things or projects coming into this particular suburb, it can be a little bit misleading, because you want to try and get there before everyone else is getting there. If that makes sense. But that's a video for another day. So hopefully you got something from this. I appreciate it. If you're watching to the very end, you're educating yourself. Your IQ is growing, and you're learning more and more and more, and understanding what we need to look at when we're looking at markets. So thank you for watching till the end as well.